Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, so please do your own due diligence as I'm not a financial advisor. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. So through this channel I'd like to provide you with some stock analysis and a short 5-minute trading lesson at the end of the video, so please stay tuned. So a quick recap on the previous video, we looked at ticker symbol CCIV and the proposed merger with Lucid Motors. So fingers crossed, we hope for some good news this week. Please refer back to the previous video for detailed analysis of this merger. So without further ado, let's get started on today's stock analysis. Stock analysis for today is for ticker symbol ZOM Zomedica. This is a stock I did make an investment in near close of play on Friday. My average price was $2.50 and it closed at $2.56 at 3.73% down. So why did I make an investment in Zomedica? Let's first of all have a look at the company profile. Okay, let's have a look at Zomedica. So Zomedica are a pharmaceutical company. They're based in Michigan, and let's see what they do. So they're a developmental stage veterinary diagnostic and pharmaceutical company engaged in the discovery and development and commercialization of pharmaceuticals for pets. So some of their activities that we can see here, they're involved in developing a tablet to treat diarrhea. They also have a collaboration agreement with Celesi for also treating cancer-related illnesses in animals. So certainly a positive aspect of work. So one of the things that did grab my attention was in terms of the Zomedica is the company's TrueFormer product candidate, which is an investigational device being developed as a point of care biosensor platform. So this is something that could be big in the future. So let's have a look at some of the other aspects of this company. So let's start by looking at the website, and in terms of for investors, what is the latest news? So the headline here is they are developing veterinary diagnostics to improve patient and practice health. So first headline, Zomedica increases previously announced bought deal offering of common shares to $173.5 million. Zomedica announces $25 million bought deal offering of common shares. And the third headline, Zomedica signs TrueFormer distribution agreement with Miller Veterinary Supply. So the first two headlines there indicates that the company has received substantial funding from these share offerings. And the third headline there indicates that they have good prospects in terms of going forward for growth with this distribution agreement with Miller Veterinary Supply. So that's a first positive sign. So now let's have a look at their areas of expertise. Again, they have shared with us on their website. So the headline here is they're advancing the point of care diagnostics in veterinary medicine. So first headline, committed to your success as a practitioner. So Zomedica is an animal health company focusing on the medical needs of vets in ways to promote patient and practice health. So their mission is to advance the effectiveness and well-being of veterinary practitioners by delivering professional beneficial diagnostic products and services. And then at the bottom, they are confident in their approach to evaluating the standard of care. So their goal is to bring gold standard performance to the point of care of testing and also diagnosis of disease. So this is certainly a good start. So let's now delve into some of the financial aspects of the company. We'll start with the financial health. We can see here from a short-term point of view, their assets are in excess of $53 million and the liabilities are just over $2 million. For the long term, the assets are over $3.51 million and the liabilities are $1.15 million. So this is a good sign. The company is in a strong position from an assets point of view. So let's have a look at the future. So in terms of the future, Zomedica is expected to become profitable over the next 3 years. It's not profitable right now, so it is a high risk stock. And let's now have a look at the bar chart analysis. So the bar chart analysis in terms of investors for the share prices, which is what we're interested in here now. So the bar chart analysis for the short term is saying it's 100% buy and the support price is $2.23. The medium term indicator is also 100% buy and the pivot point here is $2.52. Long term is also 100% buy. The current resistance is $2.81. So that's a positive sign. So we're going to have a look at the chart as well shortly. So let's move on. Okay, let's have a look at the recent news article before we look at the chart. So this is from Yahoo Finance, and this is looking at focusing on the earnings. So again, as investors, this is a good indicator of how the share price will move. So Zomedica's investors are looking to focus on the company's first commercial product that is looking to launch on March 30th, 2021, and in the fourth quarter, the results should be announced. So shares of the company have soared in excess of 1,962% in the past year, and that compares to an industry average of 7.8%. So very, very promising, and this is one of the reasons that I did invest in Zomedica. Let's continue with this article in terms of performance. We can see here now that the trailing four-quarter average negative earnings surprise is 50%. Zomedica reported a loss of 1% per share, whilst the Zacks consensus estimate was pegged at break-even. So let's see how things have shaped up. So fourth quarter earnings call, investors are likely to focus on launch plans of the new veterinary diagnostics company to launch TruePharma as a point-of-care diagnostics for the detection of adrenal and thyroid disorders in cats and dogs. So this is a huge potential catalyst for this company going forward. If this goes well, then certainly in terms of the current share price, which is $2.56, I do see a significant movement up. So let's have a look at the potential market for this. So let's have a look at this news article from Investor Place. Headline here is, do you love your pets that much? For Zomedica stock to be worth billions. So as pets have become pandemic must-haves, ZOM stock has been greatly overextended. So what we're kind of seeing here is there is a bullishness in terms of shares for Zomedica based on the pandemic as well going forward. Huge growth in the number of pets that people have, and let's look at what has been spent. So just at the bottom here, so Pet Products Association, pet owners spent approximately $99 billion on pets across 2020. So this certainly is a strong signal in terms of potential market for Zomedica, and very, very bullish in terms of the future. So another reason why I invested in Zomedica close of play on Friday was the release of the institutional holders. So what grabbed my attention here was significant amount of investment from some of key institutional holders. So these include Vanguard, which made a significant purchase on the 31st of December. We also have BlackRock, which made a significant purchase of shares on the same day. So this is a positive sign because certainly going forward, they must have some confidence in Zomedica. So just carrying on with the example of the institutional investors here, this article was released on the 12th of February. The headline here is Vanguard reports 79.47% increase in ownership of Zomedica Pharmaceuticals. So again, big news. So that represents a change in shares of 79.47% and the change in value of 276.05% during the quarter. So very, very positive news going forward. So now let's have a look at some bar chart analysis for Zomedica. So if we have a look at the 3-month chart here, we can see just prior to 2021 start, the shares were trading just under $1 and fairly sort of consistent up until the beginning of 2021 when they started to move a little bit up. And then on the 11th of January, we saw a little bit of a spike approaching 79 cents, and then also breaking the $1 mark on the 12th of January. And then we saw a little bit of consolidation up to the start of February. And then from the start of February, again, a spike, significant spike up. We can see the green candles there going at one point up to $2.70. So it's not quite broken the $3 mark yet. There was a consolidation down from $2.70 and to the current close of $2.57. So I think that's a healthy sign. It's a good opportunity also for people to enter this play. I do see in terms of going forward momentum towards $3, and long term, if the true former trials and the agreements and the market share continues to increase, and in 3 years' time, once we have profitability, I certainly see 5x or 10x in this stock. So I will be considering holding this certainly for the medium to long term. So in terms of a strike price for Tuesday, currently it closed at $2.57. I would certainly consider a first entry into Zomedica at anything below $2.40. So put this on your watch list. It is a penny stock. It is high risk. So make sure you include a stop loss and be prepared to only invest money you are prepared to lose. Okay, so now it's time for lesson of the day, and the lesson of the day today is looking at understanding the OTC. So the OTC is the over-the-counter market. It's not the mainstream NASDAQ market. So a lot of the shares that we invest in here through this channel are traded on the OTC. So let's have a look at what that means. So the OTC is a separate market which lists stocks similar to the NASDAQ, but the difference is obviously there is less regulation. There are different levels within the OTC. Lots of companies within the OTC will try to uplist onto platforms such as the Nasdaq, and we've seen that with Alpine, and this also enables significant growth going forward. So most of the stocks on here are considered to be penny stocks. They do carry much more risk, and lots of new and emerging companies are listed in the OTC. Lots of companies that are not well established, and companies that are also well established but not with significant growth. Not all OTC stocks are listed on Trading 212, Webull, and Robinhood, so trading is not always accessible. Sometimes you may have to use alternative apps to invest in some of these companies, but certainly in terms of growth, the penny stocks will give the highest returns but also give you the highest risk as well. So please be careful when trading with OTC stocks. Thanks for watching and stay tuned, and please join me again in the next video.